Good morning. Firstly, the revenue guidance and the EBITDA margin guidance that the company has given, they're expecting their revenue to increase to around 5 billion US dollars by the end of financial year 2026 as compared to what they did in FY22. The company is expecting a 16% revenue CAGR till FY26, and their EBITDA margin guidance is expected to be higher than 15% as compared to 12% reported by the company in FY22. On the return on capital employed, they're expecting this to be around 12 to 15%, while the net debt to EBITDA is expected to be below 2 times according to the management. Now, what the company said, will their focus be for the next 2 years? Well, the main focus will be to sweat their assets that they have created over the last few years, and they'll increase capacity only if needed through debottlenecking and by improving their efficiencies. On the price hike, the management said that they are looking to take price hikes at one go. Initially, they started with around 2% price hike in December, then they went ahead with 3% price hike, and the recent one that they have taken in the month of June is 4%, and they've completely passed on the increase in RM prices to the consumers. On demand, they're saying that the replacement demand is holding up well, and they're seeing an improvement in the long haul trucks and bus segment going forward. In Europe, they said that the priority will be to improve distribution in the countries in which they have not been present and to improve their product mix going forward. On the raw material and on margin, they are saying that the commodity prices have appeared to have peaked out. Rubber production is expected to increase in this calendar year, which will lead to lower rubber prices, and the pressure on margins on that, they're saying that there could be some pressure in the first quarter and the second quarter, but they're expecting things to improve in the second half of this financial year, that is FY23, and they have not given any margin guidance for the first quarter of FY23 because of the raw material pressure that they're currently seeing in the market.